Union Budget 2025-26 has been released today. Now, to understand this complicated document, you need to understand certain basics of the budget making process and what all things are there in the budget. Because you won't be able to understand this document unless you are aware of these basics. Now, most of the people who are involved in the budget making process or are economists or students of economics, they would understand these basics. But for all of us who are not from this field, well, understanding this budget document is very important, and to understand that, we need to be aware of these basics. So, the further details that would be there in the union budget would be covered in other parts of this lecture. But we will understand today what are the basic concepts that you need to be aware of to understand union budget. Okay, so what all is entailed in 2025-26 document will be covered later. But now we are going to understand what is budget basically, and why does Government of India come out with a budget every year. Okay, so let's talk about this thing. Now, the first question that needs to be answered is, why is government coming out with budget every year? Well, the answer is that it is a constitutional duty of government to come out with a budget every year. Yes, Constitution's Article 112 says that the President shall, in respect of every financial year, shall present annual financial statement before both houses of Parliament. So it's a constitutional order to the President to present annual financial statement to both houses of Parliament, Lok Sabha, Rajya Sabha. Now, the word president over here means union government, because president is bound by the aid and advice of union government. Whatever would be decided by union government shall be the duty of president to perform. Okay, so when the constitution says that president shall present annual financial statement, then president shall be presenting it through his minister or her minister in today's case. Okay, and her minister for presenting budget is the finance minister Nirmala Sitharaman. So it is the constitutional duty to present annual financial statement before both houses of Parliament. Now, this annual financial statement is nothing but budget. So you have to remember this. The word budget is nowhere mentioned in the constitution. Our constitution mentions budget as annual financial statement. So annual financial statement and budget are one and the same thing. Okay, as per our constitution. Now, our constitution doesn't just stop there. It also says that what all would be included in this document called annual financial statement. It actually mentions the contents of this budget, annual financial statement. Okay, in Article 112, it says that this annual financial statement shall contain estimated receipts and expenditure of Government of India for that financial year. What does that mean? Well, budget is nothing but an account of money coming in and money going out of government. Okay, now money coming to the government would be receipts, and money that government is spending or money that is going out of government's treasury is expenditure. Now, for the entire financial year, whatever money is coming in and whatever money is going out, you have to present that data in a statement, and that statement is nothing but annual financial statement. Now, the time period is also mentioned. Okay, these estimated receipts and expenditure for Government of India should include the estimates and receipts or expenditure and receipts of that financial year. And look, there is a difference between calendar year and financial year. Okay, calendar year starts from 1st January and ends at 31st December, but financial year in India starts from 1st April and ends at 31st March next year. That is why it is called budget of 2025-26. Okay, it will start at 1st April 2025 and end at 31st March 2026. All right, so this shall be the content of the budget. The constitution has made it very clear that every year you have to present before both houses of parliament your estimated receipts, your estimated expenditure. Now, the Constitution again doesn't just stop there. The Constitution also mentions the format of this statement or the format of this budget. The Constitution says that your expenditure shall be divided into two parts. Okay? One part would be called revenue account. And the Constitution says other expenditures would be included in other accounts. That other account is generally called capital account by the government. So the Constitution has made it clear that all your expenditures and receipts shall be divided into two parts: revenue account, capital account. Okay. Plus, the Constitution also mentions one more thing, and this is very important. Okay. You know, the vault or the money of Government of India is kept in Consolidated Fund of India. Now, all the expenditures that the Government of India is incurring happens from this Consolidated Fund of India. Now, there are some expenditures that are going to take place irrespective of what is written in the budget. Okay. These expenditures are salaries of the president, salaries of the MLAs, salaries of the MPs, salaries of the government officials, all these things. These will stay as it is. You cannot change them in the budget. Okay. These expenditures are known as expenditures charged upon Consolidated Fund of India. Okay. These expenditures won't be put to vote in both houses of parliament. You know, the budget will be enforced only if both houses of parliament pass that budget. And that budget shall be passed only if in both houses of the parliament, but especially in Lok Sabha, the budget wins the majority vote. Only then it shall be passed. Clear? Now, expenditure charged upon Consolidated Fund of India, which includes salaries as mentioned in the Constitution, okay, President, Council of Ministers, not Council of Ministers, MPs, MLAs, and all that. This shall not be voted upon. But all the other expenditures, like expenditure on building a road, expenditure on education, all these things shall be voted upon, and they are not called charged upon expenditure. They are different expenditures. Okay. Now, this has to also be separated. So, the Constitution has given the format. First of all, your entire budget document is divided into two parts: revenue account and capital account, and your expenditure charged upon Consolidated Fund of India should also be written separately. Clear? So, these are the constitutional provisions that we should be aware of. All right. Now, the thing is, let's get to the basics. What is budget basically? Budget is nothing but an account of government's receipts, that is the money that is coming in to government coffers, and government's expenditure, that is the money that is going out of government coffers. That is it. That's all. Okay. Now, government earns money through taxes, through through various means. Government gets loans. Government gets paid through various means. All of that would be included in receipts. And government spends a lot of money also. Okay. Government spends in welfare scheme. Government spends in paying back loans. Government spends on building infrastructure. All of that is money going out, and that would be included in expenditure. Now, what is the constitutional duty of a finance minister or president? To present the budget. And the Constitution has also clearly mentioned how this budget or annual financial statement shall be divided. Okay, so let's talk about format of the budget. So your budget will be divided into two parts: revenue account, capital account. If I have to give a single line difference between these two accounts, then it is as following. Revenue account includes day-to-day expenditure and day-to-day receipts of the government, whereas capital account includes long-term expenditure and long-term receipts of the government. Okay, this is a single line difference. Though, when we'll study the topic of government budgeting in our economics lectures, you'll realize that there is a much more detailed difference. But right now, I just want you to explain some basics so that you understand the budget document. All right. So I'm just giving a one line difference. Okay. So the entire budget is divided into two parts. That is revenue account and capital account. Now, revenue account has its own set of receipts, which are called revenue receipts, and has its own set of expenditure, which is called revenue expenditure. Similarly, capital account also has its own set of receipts, which is called capital receipts, and its own set of expenditure, that is called capital expenditure. All right. So let's talk about these two accounts one by one. Okay. First of all, you can see over here that this is the situation. Revenue account has revenue receipts, revenue expenditure. Capital account has capital receipts and capital expenditure. Now let's discuss these two accounts one by one. So we'll be starting with revenue account. What all is included in revenue account? Okay. So the green portion over here is receipts portion, the money coming to the government. And the gray portion over here is expenditure, the money getting out of government's hands. The expenditure the government is incurring. Now, with the new account, there are two types of receipts that the government gets. Okay, tax receipts, non-tax receipts. Very simple for all of us to understand. Government earns money in the revenue account either through taxes, or there are other ways also through which government earns money. Okay, now tax revenue is pretty simple. It is also the most dominant portion in your revenue receipts. Now, taxes are of two types: direct tax, indirect tax. Now, direct tax is that tax which is directly levied at you on your income, like income tax, corporation tax, corporate tax, capital gain tax. All these things are examples of direct tax because they are directly levied at you. The burden of these taxes falls on you, they are collected from you. All right. What about indirect taxes? Well, indirect taxes are those taxes whose burden falls on you, but they are not collected from you. For example, whenever you buy something from the market, you pay GST. Okay. But you pay GST to the shopkeeper. So the burden of GST falls on you. But government is collecting GST from the shopkeeper, right? The shopkeeper has to file GST returns. Make sense? So in a way, can I say that you are not paying GST directly to the government? You are paying GST indirectly to the government through the shopkeeper. So GST is an example of indirect tax. Okay, it's mostly levied on goods and services. Direct tax is mostly levied on your income. GST is an example, custom duty is an example, and many others. All right, then this is tax revenue, direct tax, indirects. Now let's talk about other part of your revenue receipts, that is non-tax revenue. All right, now what sort of revenue accrues to the government that is not part of taxes? Well, government provides loans to state governments. Sometimes government of India also provides loan to developing countries like Bangladesh, Nepal, and all that. Now, these loans that these countries or states have taken, they pay annual interest on them. All right. That interest is known as interest receipts. That also forms part of your revenue receipts. Then there are many government companies that earn profits like ONGC, GAIL, SAIL, Bharat Heavy Electronics Limited, Bharat Electronics Limited. They all earn some form of profit. That profit is also transferred to the government. It's included in non-tax revenue. Then sometimes if you commit an error or you commit something bad, basically something illegal, you pay fees or fines. Those fees and fines are also collected. Fees are collected on government services that you pay. All right. For example, when you are filling UPSC form, you're paying a fees, right? For that form, that is fees for that service. And fine is something that you pay when you have done something wrong. Then sometimes some international organizations give government of India some grants, like UNESCO gave India a grant to preserve World Heritage Sites. UNICEF paid India a grant to build water facilities for remote regions. Okay, so these external grants are also part of non-tax revenue. All right, now let's talk about expenditure. Now, expenditure can also be divided into two parts, though this division is not an official division, but I have created this division for your understanding. Okay, expenditure can be divided into two parts. day-to-day expenditure, which includes subsidies given by the government, salaries and pensions, defense expenditure, etc. These are day-to-day expenditures. Then there are some expenditures which are related to interest payments and grants. Over here, the loans provided by Government of India received some interest. That was part of receipts. But sometimes Government of India also takes loans, right? And Government of India pays interest on them. So interest payments on loans taken is part of expenditure. Then sometimes Government of India also provides grants to state governments. Remember, there is a difference between grants and loan. Loan is something that you have to pay back. Grant is something that you don't have to pay back. Okay, so grants given by state government, not loans. Grants given by given to state governments is part of expenditure, and that too revenue expenditure. Okay, so I hope you got basic clarity of revenue expenditure. All right, now we'll talk about capital account. Very simple again. So capital account also has receipts. This green portion is receipts. This gray portion is expenditure. Okay. Now, some receipts on capital account are debt creating. They create a debt on the government. Okay. And some receipts are non-debt creating. What are debt creating receipts? That is money coming in. Loans taken by Government of India nationally or internationally, either through World Bank or through RBI. That loan that has been taken by Government of India is money coming in, but it is creating a debt. So debt creating receipt. Plus, sometimes general public deposits money in Provident Fund, Kisan Vikas Patra, okay, National Savings Certificate. Now, the benefit of giving money or saving your money in these schemes is that you are paid some interest. Okay, so in a way, you are loaning this money to the government because government is paying interest on them, right? And when this period ends, maturity period ends, apart from this interest, you will be paid back the entire amount. So it is a form of debt on government. So receipts from small saving schemes like these are also debt creating receipts. Then there are some non-debt creating receipts. For example, remember this part. Government of India gave a loan to state government. Okay. When the state government was paying interest payments annually, those interest payments were part of revenue receipts. But when the state government will pay back the entire loan amount, okay, not interest, the entire loan amount, okay, the entire principal amount, that will be part of capital receipts. And this capital receipt doesn't create any debt on Government of India. So recovery of loans given by central government, okay, and the other is disinvestment. Let's suppose Government of India decided to sell Air India company. Okay. Now the money earned by selling Air India is disinvestment. Let's suppose Government of India decides to sell 40% shares of Bharat Electronics Limited. So the money that came by selling 40% shares is called disinvestment, and that is non-debt creating. Yes, very simple. Now, this is very important for you to understand because all of this would be mentioned in the budget document and you won't be able to understand budget if you don't know this. Okay. Then we talk about expenditure. So some expenditure is debt related. For example, if World Bank has given loan to Government of India, as long as Government of India is paying annual interest to World Bank, that is revenue expenditure. That will be in revenue account. But when Government of India decides to pay back the entire amount at the end of the period, that would be capital expenditure. Loans given back by central government. Entire loan amount paid back by the central government. This is this part. Okay. Now, when central government, remember, central government gives grants to states, right? Those are part of revenue expenditure. But when central government gives loans to states, that is also money going out of central government. That would be part of expenditure, capital expenditure. Okay. And some capital expenditure is used to create assets. Okay. Expenditure on infrastructure like building roads, bridges, railway tracks, power plants, all of that creates assets. This is capital expenditure. Okay. Plus capital expenditure on defense. So when government is providing subsidies to armed forces or providing salaries for armed forces, the day-to-day expenditure on defense is revenue expenditure. But when you spend money to buy tanks, to buy aircraft jets, that is capital defense expenditure. So defense expenditure can be both revenue and capital depending upon the expenditure. Okay, this is capital account. Clear? Very simple. Now, at the end of the budget, Finance Minister Nirmala Sitharaman would be talking about certain deficits. Okay, deficit means the loss that the government is incurring. Okay, now when will the government incur a loss? If its expenditure are greater than its receipts. Yes, had its receipts been more than its expenditure, then we would have said that the government is running a surplus. But mostly and almost always, government runs a deficit. That means expenditures are more than receipts. Okay, now by how much government expenditure exceeds receipts? By how much? Let's suppose total government expenditure was 100 rupees and total receipts that the government has received are 70. Then we will say that the deficit is 30, right? This is nothing but, though there is a lot of more things, more nuances that you need to be aware of, but I'm giving you a broad understanding. This 30 is nothing but fiscal deficit. Okay, and government always comes out with the fiscal deficit figures, and these fiscal deficit figures are measured as a percentage of GDP. So let's suppose India's GDP is 300 rupees and 30 rupees is the fiscal deficit. So government will say that 30 rupees is fiscal deficit, 300 rupees is total GDP of India. So government will say India's fiscal deficit is 10%. Always remember, these deficits are measured as a percentage of GDP. Clear? So this is your fiscal deficit. Now, very large fiscal deficit is alarming situation for the government, very bad thing for the government. Because if government is running a loss, this deficit, how would government fulfill this loss? If government is incurring an extra expenditure of 30 rupees, how is the government paying for this extra expenditure? Well, the government borrows. Okay? It is through borrowings that you actually back your fiscal deficit. Okay, so if government this time announces that India's fiscal deficit has increased dramatically, then that would mean India's debt will also increase dramatically, and that is never good news. Okay, so that is why government is always in this effort of reducing fiscal deficit. Clear? There is another category of deficit which is called revenue deficit. This is deficit not on the total budget, but this is revenue deficit on the revenue account. So what is revenue deficit? Revenue expenditure, not capital expenditure, minus revenue receipts. So if in your revenue account you're running a deficit, then that would be called a revenue deficit. Now this should also be not more, because this is basically your revenue deficit is high because maybe you're paying too many subsidies, you're paying too many salaries, and this is never good for the economy in general and government in particular. So if in today's budget you hear that the revenue deficit has increased or the fiscal deficit has increased, well, that is bad news for the economy and the government. Okay, so keep an eye out for revenue deficit as well as fiscal deficit, because these numbers are very important, and that's why government presents these numbers along with the budget document. In fact, this is the legislative duty of government to present these deficit numbers. Okay, as per Fiscal Responsibility and Budgetary Management Act, government has to present these deficit numbers along with the budget. And remember, both these deficit numbers would be presented as percentages of GDP. Just remember this. So when you'll see the numbers, revenue deficit, it will be like 2% of GDP. Fiscal deficit, 3.5, 3.8% of the GDP. They are presented as percentages of GDP. Now we'll come to an important part, and this confuses most of the people. Okay, hear me out carefully. You see, this union budget is known as Budget 2025-26. The government is going to present receipts like income tax receipt, corporate tax receipt, interest payment receipts, all these receipts and expenditure for the coming financial year, which will start on 1st April 2025 and end on 31st March 2026. Now, these receipts or expenditures are estimates of the government, that this is something, we have a basic idea that this is something we will receive and this is something we will spend. Okay, so this budget will actually present data, whether with respect to all types of receipts or all types of expenditure for the coming financial year. Okay, now in the previous budget, which was 2024-25, government also presented this data, right? Let's suppose in 2024-25, government said that income tax receipts are going to be 20 lakh crore. Okay, let's suppose government presented this data. Okay, that was government's estimate 1 year back on 1st February 2024. But we are in 1st February 2025. And the government found out that we estimated this thing a little wrong. Actually, we think now, after 1 year, after receiving so many income tax payments, that we are only going to get 15 lakh crore from income tax. All right. Now, this 20 lakh crore is budget estimate. That is for the upcoming financial year. This 15 lakh crore is called revised estimate. Okay, revised estimate comes once you have received enough income tax payments to actually update the data. Okay, so this budget is also going to present some budget estimates. Okay, some receipts and some expenditure. After 1 year, next year, the government will get actual data on how much they have received or how much they have spent. Then they would revise this estimate and call it revised estimate. Okay, this is very important because most of the time when you will be reading this budget document, you will see these things. Okay, I'll show you. Government, or you'll see this, that the education expenditure in this budget document, that the education expenditure will be, let's suppose, 1 lakh crore. Okay, and in brackets it would be written BE. BE means that the government is talking about the upcoming financial year. If it's written that the education expenditure is 90,000 crores and the words RE or the letters RE are mentioned, that means the government is talking about the current financial year, which is 2024-25, which is currently going on. It will end on 31st March 2025. Okay, so if you'll see the letters BE, that means budget estimates, and budget estimates mean for the upcoming year. RE, revised estimates, mean for the current year. Okay, the government also presents data about previous year, that is 2023-24. Okay, now these are known as actual estimates because the full data has been received by the government has analyzed this data, and the government has come out with final figures. Actual estimates, or we'll say provisional actuals. Okay, provisionally these are the actual estimates. Okay, so basically in this budget document of 2025-26, government is giving you estimates of 3 years. Okay, the upcoming year, that shall be denoted by budget estimates. The current year, which is currently going on, revised estimates. And the previous year, that will be called actual estimates sometimes. Sometimes AE is also referred to as advance estimates. Please do not confuse it with that. Or provisional actuals would be written. Okay, so if these letters are written in the brackets, Now you know. All right. Just one more fact before we conclude this lecture. Okay, by the way, this lecture or this budget series will be a three-part series. This first part that we are discussing right now is covering just the basics of budgets. Okay, now what all would be mentioned in this budget document that is currently being presented by Finance Minister Nirmala Sitharaman. The data would come out a little later, so we'll have second part and third part on that. What is mentioned in the budget? This part was all about basics of budget so that you can understand budget on your own. Okay. One last thing. The thing is that budget is all about expenditure and receipts, right? Now, each and every expenditure that the government mentions, education, finance, police, every type of expenditure, each and every expenditure is separately voted upon. Okay, except the expenditure charged upon consolidated fund of India that we have covered in the beginning of the lecture. Okay, each and every expenditure is voted upon in Lok Sabha. That's important, only in Lok Sabha. Okay, if that expenditure gets the majority vote, that expenditure is passed. Then a list of all the expenditures is created that have been voted upon as yes. Okay, this document is presented as a bill in the parliament. This bill is called appropriation bill. It contains a list of all the expenditures that the government plans to incur in the upcoming financial year. Okay, then this appropriation bill is voted upon, and when it is passed by the parliament, then those expenditures can be taken away from the consolidated fund of India and spent by the government. Only when this bill is passed by the parliament, then only government can take that money out and spend it. Okay, this is known as appropriation bill. Okay, and it has to be passed by Parliament of India. This is the law. Clear? One more thing about the receipts, especially tax receipts. Okay, as far as tax receipts are concerned, different proposals are voted upon for tax receipts. Okay, each and every proposal for receipts is voted upon. Then a separate list is created, okay, of all these proposals. Okay, then this document is presented as a bill known as the finance bill. Then this bill has to be passed by the parliament, okay, for it to become a finance act. Therefore, all the tax proposals cannot be implemented unless this finance bill becomes finance act or this finance bill is passed by the parliament. Okay, so all the tax proposals are there in finance bill, all the expenditures are there in appropriation bill. Just remember this. So when you encounter these terms, appropriation bill, finance bill, you know what they mean. Okay, and most of the times these bills are voted upon during the month of March, end March, and they are passed then. All right. Okay, so these are the basics that you need to be aware of. Don't worry, the contents mentioned in this year's budget, which will be revealed soon, would be discussed by us in the other two parts. This part solely focused on basics, and I hope now you're aware of these basics and now you can see this document in a new light with better understanding. That was the entire purpose of this video. All right. Thank you so much, everyone.